Hello, I am Wendy Bolio. I'm looking at a lot of the faces. I know many of you. I am the National Account Executive here at Buddy. I have a lot of roles, but my focus has been for the last year and a half on group worksite PEOs, credit unions, small group, large group. And so today is the first time ever that Buddy has put together a nuts to bolts and everything in between on group, how it is, why it's important, what we're seeing in the marketplace, why it matters to your clients, why it matters to your book of business, why it matters to the brokers that you work with. It takes a team, and being on an Olympic team in the past and a lot of other teams, it takes focus, commitment, talent, and above all, communication. So what you're going to hear from these experts today is group market updates, absolutely. Identifying opportunities, what does that look like? Different sales strategies that we have. If you've sold a group, and I talk to people every single day, they go, oh my God, now what? I really have this all in place. Now what do I do? We're going to cover it all. So with that, let's turn it to Mark first. And Mark, here we go.
Yeah, well, I'm really excited about this webinar. I think the group area is the fastest growing segment of long-term care. Jason, I think, is going to kick us off today with some topics. Jason, you want to do a quick intro?
Yeah, of course. I'm Jason Dutra, Director of Partner Success here at BuddyIns. Wear whatever hat is kind of required of me in the given day, but all kind of wrapped into a package of giving our partners what they need to be successful, especially as it relates to the sales side of things, and just making sure people are making the most out of their time with us when they're here.
Perfect. And we also have Gretchen Berry, who's our Chief Marketing Officer. Behind the scenes, a lot of the heavy lift of long-term care, especially on the group side, is education and marketing. And so thanks, Gretchen, for all you do to support getting the message out to all the people that we're working with.
Well, thank you, Mr. Glickman. I'm looking forward to this.
Perfect. And then we also have today Sandy Doherty on the line. She's our head of operations. So when it comes down to anything on the technical side, the enrollment platforms, again, there's a lot of hands that are helping us, but Sandy's the maestro coordinating all of that activity. So thanks, Sandy. All right, Jason, why don't we kick it off with some group market updates? That's always a good way to start. And so talk about what you're seeing in the area in terms of what's growing in the group marketplace.
Yeah, so just like you said at the beginning of the webinar, Mark, group long-term care is the fastest growing segment of the long-term care market by far. Obviously, we're still seeing growth in the long-term care industry as a whole, but group long-term care has really taken on a life of its own and has become a sector of the market all its own, with a really robust, range of carrier offerings and really kind of unique product plan designs. And this growth was really stimulated by the Washington CARES Act. For those of you who know, in 2021, Washington passed a bill requiring a payroll tax for a small long-term care program for working adults, and really the need to own some sort of private insurance plan to opt out of that payroll tax. So with that really unprecedented demand for long-term care insurance that we've really never seen before, you need to kind of have group solutions in place ready to go to meet that demand and help as many people get a plan as possible. But beyond that, it really generated so many questions and so much interest in long-term care for the first time. When it becomes, relatively compulsory one way or the other, the government is going to offer it to you, or you are going to do something yourself in the private market, that creates demand that this industry has never seen before. So we saw tremendous, not only just policy sales, but industry growth coming out of the Washington CARES Act. And anybody in Washington, of course, has heard of it, but they have friends and family members as well. So we saw that interest spill into really a nationwide increase in interest and demand. And with other states not necessarily having something set in stone yet, but planning or being rumored to be adding some sort of payroll tax program, it's no surprise that we're continuing to see that sustained growth. And just given the success of some of the group carriers coming out of the Washington CARES Act, that has kind of kept the conversation rolling into group long-term care really being back in a big way, and new carriers are entering the market to be a part of this at a really rapid pace. On the sales side, we're seeing a carrier join up into this side of the market and offering some sort of new product every few months. And we don't see that growth necessarily stopping, and every carrier has some new and interesting niche in the marketplace to offer. So we're really excited by what we're seeing. And of course, just as kind of a foil to the individual world, the things that are really stimulating the growth of the group market is guaranteed issue underwriting, affordable rates while still providing really good long-term care value, and other things like unisex premiums are really generating a lot of interest for the market today.
Yeah, I would add to a little bit more color, Jason, in that there's all different types of long-term care products, right, that are in the market, whether it's term life, universal life, whole life. But I think the Washington CARES Act kind of forced a lot of the carriers to file their riders as true 7702B, which, from our perspective is a great outcome because it provides the most robust types of benefits and consumer protections. I think we started in this market about 4 to 5 years ago. Over the last 1 to 2 years, though, is when we've seen the fastest growth. I think we'll end up enrolling or educating about 1 million people in the next 12 months to give you guys perspective. A lot of large groups, but also even the smaller groups with executive carve-outs are available now again. And I predict that we'll even see some traditional products re-entering the group space next year. I've heard a couple of carriers talking about that as well. So I think you're going to continue to have more options as time goes on here.
Hey, Mark,
Yep.
it's Chuck Saunders. How you doing?
Hey, doing well.
Good. I was just curious as to if you have some legislative update on where California is in this process.
Yeah, great question. That's probably one of the more common questions we get. So as many of you know, California finished their task force recommendation at the end of last year. And they kind of waited because a lot of people speculated, they weren't going to do anything before the election. And so we haven't heard much updates since then. So I would predict that in January or February, when the legislative season begins, we'll hear kind of rumblings again about it, but nothing new beyond what the task force recommended. The one big thing that happened from the election was Washington State had a referendum that they tried to pass to make the Washington CARES Fund payroll tax voluntary instead of mandatory, which we know would have led to a cycle of making it probably not sustainable from a financial perspective. And the voters actually rejected that, and the Washington CARES Fund continues to march on as it was. So the fact that Washington stuck with their program is more likely that other states like California are seeing that as a sign that voters still want to have these types of laws on the books. Great question. And feel free to type in questions in the chat. I know taking them live is difficult on a larger webinar like this, but we'll also answer some live questions as we go here.
I do have another one for you, real quick question from the chat, actually. Gene asks, what percentage of group enrollments seem to have employer paid full and how much partial, and how has that been growing?
That's a great question. And because there are so many new options and new carriers, some of them focus on employer funding. So we definitely see that area growing right now. Historically, though, prior to the last couple of years, most of the carriers were large voluntary benefits carriers. And the initial groups, especially even the ones in Washington, were the large tech companies that offered this as kind of a addition to their robust benefit suite. So we're talking about employers that have, 10 to 100,000 employees were the first to do this. But now we're starting to see more of the clients and carriers bringing this down market. Probably at least once a week, we get a question about a Unum plan or a Genworth plan that they already have in place that no longer takes new entrants, or maybe is having a lot of rate increases and looking at, do these products make sense for my new employees to replace my old plans? So a lot of the same trends that you've experienced on the individual side are happening on the group side as well. And certainly continue to see more of those opportunities for small groups coming up. So we're going to talk a lot about small groups today, actually, and employer funding.
100%. Why don't we move on to the next segment that we have here, which is new products. So the group market is giving rise to some really innovative long-term care solutions, and we're seeing, like I said, a new carrier coming in with some sort of new product design every couple of months. But the predominant plan design that we're seeing is hybrid long-term care. As Mark mentioned, we wouldn't be surprised to see a traditional long-term care carrier enter the market here within the next year, 2 years, whatever it may be. But hybrid products are the predominant plan design that we're seeing right now. And the interesting thing is we're seeing a variety of different product chassis. Universal life, whole life, term life to age 121, which is extremely different. Some of you may not have even heard of a term to 121 chassis with a long-term care rider. But lots of different product types to choose from, each offering their own level of benefits and a really interesting comparison to make between the carriers. The big store of value that we're seeing in these long-term care plans is not necessarily the long-term care benefit that's accelerated from the death benefit of these life insurance plans, but really the riders that are attached to these products. So the extension of benefits rider is a big one. Whenever you've accelerated all of your death benefit for long-term care, generally these carriers are making a second pool of long-term care available to you, essentially doubling the long-term care value you can get from the policy at really affordable rates. And restoration of benefits riders are probably something that's familiar to you on the individual side if you work with, say, short-term care products, but it's a little bit different on the group side. The restoration of benefit rider actually will preserve the life insurance benefit in these policies. So if you do use up all of your death benefit for long-term care under these group plans, generally we see either 50 or 100% of the death benefit being restored, offering a really, really versatile benefit. Even if you use that death benefit for long-term care, you could see in many cases 50 to 100% of that death benefit back. So an even more interesting value prop than, say, having a residual death benefit, for example, of maybe a small $10,000 death benefit, no matter what. We're seeing in a lot of cases 100% of that death benefit staying in place.
Yep. And for those of you
And-
on the traditional side are familiar with that, think about, full return of premium. If you remember that concept, it's similar here where you're getting both the long-term care and the life insurance.
Having your cake and eating it too is pretty nice. And we're also seeing, a lot more premium guarantees because there are hybrid products that are the predominant plan design here. So guaranteed life insurance premiums that stay level even as you age. So you're not going to see increases based on your new attained ages. These are issue age level policies for the most part here. Very, very powerful value proposition, especially because we are seeing groups, like Mark said, very often are getting a little exasperated with rate increases, and just makes the conversation much easier when you're speaking to a group and can offer premium guarantees. That peace of mind is definitely very powerful in a conversation. And then, of course, there are a number of other ancillary benefits to enjoy about these plans. So options for spouses that generally differ by each carrier, but every carrier will offer something for a spouse of an employee, an eligible employee. Fully portable benefits. So when you leave that employer, either by retirement or moving to a new employer, whatever it may be, those benefits are fully portable to an individual certificate. And as a matter of fact, when you complete your application for many of these group plans, you are given an individual certificate. So an individual plan right out of the box with a group kind of umbrella, and unisex premiums, which cannot be understated in long-term care, especially for the females. Females tend to be about 50% more expensive on the individual side of the market. So to be able to take advantage of unisex premiums is generally a gigantic value added for females. And as we know, long-term care tends a lot of the time to be a female issue. And what's kind of an interesting and nice double whammy is that carriers actually really like to see groups that are a really high female gender blend. So you're kind of getting the ideal group for the carrier, and those in that group who are female are benefiting a lot when you think about the price and value proposition.
Yeah, Jason, one other kind of analogy for those of you who are familiar more on the individual side is because we have these extension of benefit riders, they really look a lot like the individual hybrids that dominate the marketplace, whether it's your Lincoln Money Guard or your One America Asset Care or your Nationwide Care Matters products. They're almost like miniature versions of that. And I think the distributors that are focused on long-term care like we are, think of them the same way, which is we actually almost don't even look at the chassis. We look at what the LTC benefits do for the client first, and the life insurance as a nice to have secondary feature that also provides stability in the policy and the guarantees. So whether it's universal life, whole life, or term to age 21, our conversations are actually very much the same. And some clients resonate more with the term concept because they just like the idea that they're paying less for the life insurance component. Some clients resonate more with the whole life because they like the fact that there's a cash value and guarantees. But the reality is we're looking at the price and value of the LTC first either way.
Yep, these are very long-term care forward products. So even when we're presenting two groups, we're presenting things in long-term care terms first.
Yep. And we just saw the first hybrid that I've seen on the group side, or like with guaranteed issue, that actually has 5% compound inflation. So we're starting to also see some of those features re-entering the marketplace. But we'll talk a little about that because it's still a brand new type of concept.
Yep. So getting into group strategies a little bit, it's really going to depend on the group that you're in front of. So there are three major sectors that we're working with as far as groups, what type of group they are and what size they are. So we're working with small groups, what we would categorize as mid to large groups, both employers on the employer side with employees, and then non-employer groups. So I'll kind of take these one by one, and then we'll kind of sum it up here. So small group solutions are really sort of new to us. We've had a couple of carriers come on our radar over the past year that are offering some really compelling options for small groups. And by small, I mean down to 5 lives for guaranteed issue coverage. So this is something that really hasn't existed over the last, I would say 6 months. We've seen these carriers really start to enter the fold as premier partners of ours. And generally, these groups have really been told up to this point, we don't really have much for you at this point outside of something on the individual side or something with simplified issue underwriting. So to be able to offer guaranteed issue underwriting for groups down to 5 is a major, major win. And generally, the key to success in working with those small groups is employer funding, because these are group plans. And even though we have guaranteed issue underwriting available and all that good stuff, and we're able to work with 5 to 49 employees much easier than we ever were before, there are still going to be carrier minimums and there are still going to be participation requirements. So employer funding tends to be the real key to success in working with small groups, to be able to waive those participation requirements, because having a 5 app minimum on a 5 life group is generally not something that should be kept up to a voluntary enrollment at the end of the day. And in general, just not having to deal with the headache of participation requirements and worrying about how the offer will stand if you don't hit them. It's just a huge relief to not have to deal with that. And that really applies to groups of even larger sizes than the 5 to 49 life segment.
Hey,
Yeah,
And there are a
Jason.
couple.
Yep.
Yeah, go
I'm
ahead, Wendy.
sorry, only because I want to interject here on the underwriting of 5, like the GI for 5, we all get it, but underwriting on those 5 is really critical. You can't have like 3 of the 5 people be in a, you know, a real health crisis and go ahead and apply for a policy. Yes or no? I mean, I know the
Yeah,
answer.
no, I think it's important. That's kind of what I was going to bring up too,
Okay,
is
thanks.
the carriers, these are worksite benefit carriers. They're very aware of the challenges that the group traditional market has had in the past. You know, they don't want to kind of take on risks, you know, that are not in line with what, you know, voluntary benefit carriers do. So they're giving access to these small groups with these minimum participation. But if you want to have a, you know, a successful, solid ecosystem here, Wendy, to your point, you have to make sure you're offering them as a broad-based plan. Somebody comes to you and said, I have this one uninsurable client, so I want to get access to this, and I'll pay like the minimum for 4 other people and do the maximum for 1 person. I would turn down that case. It's a bad risk for the carrier. It's going to be a bad enrollment for you as well. It's not worth doing these plans unless you have a large number of people participating. There's a lot of time and effort that goes into it. At the end of the day, the carrier is going to pull out of working with you. So it's really important just to have that mindset of, is this a good risk? You know, be a field underwriter even on the group side, and that way you're going to have a long-term relationship with the companies you work with.
Yep, 100%. And then there are a couple of strategies that we use on the employer-funded side, not just for small groups, but when we get into mid to large groups, we see these strategies as prevalent as well. First is a base plus buy-up strategy. So this is a strategy of offering a plan for everyone, but generally a smaller, what we would call a basic plan, something that could generally provide a couple of hours of home health care, for example, for an eligible employee who may claim on it, and offer the opportunity for those employees to buy up on a voluntary basis to higher levels of coverage. That employer-funded base is very important for a number of reasons. Number one, we talked about the participation requirements being waived. But number two, for the employer, it's a really nice way to be able to market yourself as an employer of choice, somebody who cares about this specific part of financial planning, cares about their employees. So it's a really good excuse to kind of do some hero marketing for the employer, right? And the employees, once they own a little bit of this and they take advantage of that education, then they understand the value to them of potentially purchasing more. So we've seen base plus buy-up strategies lead to really good results, not just because you have that guaranteed participation and guaranteed premium from employer funding, but also the education takes hold quite a bit more. And we see a lot of employees buying up to higher levels of coverage on a regular basis.
Jason, I want to kind of hammer that home a little bit more. From a broker perspective, if you're trying to grow your business, this is probably by far the best way that I can think of to grow your business. You're acquiring the hearts and minds of people, probably at an average age that's 10 to 15 years younger than what you would typically experience. You have an opportunity endorsed by HR or endorsed by the association to educate people on a regular basis, at least once a year, but oftentimes multiple times a year. And you know what it takes to get people's hearts and minds is repeat, you know, consistency with that education. So next year they might enroll, the following year they might enroll. Once they buy a smaller plan, like Jason said, not only can they buy up with the group plan, they can also meet with you one-to-one to buy an individual policy to supplement the group plan. But it's really powerful, the idea of owning something and really believing it. Once you own it, makes you much more likely to pursue it and want to learn more about that product. So if you start off with like a 10 pay, which of course we of course love the products that have, you know, higher end executive carve out benefits, a lot of times you aren't able to engage with people at that level because of the expense. But if you start in there with a $50 or $100 a month plan, maybe they graduate to a 10 pay in the future. That type of thought process.
Yeah, 100%. An amazing client acquisition tool. And I'm glad you hammered it home because it needs to be. And then the executive carve-out strategy is definitely going to look a little bit different than it does on the individual side of the house doing an executive carve-out. I think in the group space, executive carve-outs are a bit more flexible because we can really do a carve-out any way we want when it comes to the group side of the house, whether it be a 49 employee group where we're carving out the top 20 key executives, or a 10-person group where maybe it's a law firm and we're carving out the 5 partners. We can really choose any number of employees to carve out at any benefit level. So that's where we really kind of get into the meat of, say, analyzing the census of the group, figuring out what the incomes are, figuring out what the job titles are of these employees, talking to the group and understanding how they culturally offer benefits, and really picking out an individualized plan design for each employee, including those who are going to be carved out at a higher level. And the great thing about the carve out is, if you're not interested in purchasing a plan as an employer for every one of your employees, you can make a bit more robust of a purchase for your executives to attract and retain that key talent, and maybe compensate them in ways beyond just giving monetary raises. But also that still opens up a voluntary enrollment for the rest of the rank and file employees, or those who are not part of the carve out group. And again, this is something that applies to smaller groups and mid to large size groups. But just having that ticket to the voluntary enrollment as well, and giving the other employees access, should they want to purchase something, to own a plan, makes it a really versatile strategy. And again, groups of this size will not traditionally have access to voluntary offers. So to do that executive carve out, again, have the advantages of waiving participation, but also having all those other added benefits, make these two our most predominant strategies that we're seeing on the group long-term care side for employer funding. Mark, anything you wanted to add before I move to mid to large groups?
That's good.
Awesome. So mid to large size groups, I would say, tend to be the most flexible. They're definitely helped in all the same ways by the employer funding strategies I just went through. But for groups, I would say starting over 500 plus, or maybe even 1,000 plus, we get into the point where we can have really good success with fully voluntary enrollments. But that success, as we're going to get into later, is heavily dependent on marketing access, education, the employees knowing about the offer and knowing why it's important to take a look at and potentially purchase this plan if it's a fit for them. Again, employer funding does still remain viable, but for those larger groups, we can generally do a voluntary enrollment, and with good marketing and education, hit those participation minimums. Is there anything else you wanted to add to mid to large groups, Mark? I think the strategies generally remain about the same.
Yeah, and again, think of doing a carve out when those groups come up, but you don't have to say this is required to get the offer. Now, it is a great selling point to have the carve out because the carriers will waive their participation requirements, which HR really likes to hear. They don't want to have that pressure that this is going to be taken away from them after they've done the work, and that's going to be embarrassing for them. Sometimes the carriers will give us better rates or better guaranteed issue limits. So there's a lot of perks to doing an additional employer funded plan, and it doesn't have to be that expensive even for a large group, because of the ability to pick and choose what level you want to offer and who you want to offer it to. So even like a little bit can go a long way in that space. And a lot of times, once they have an employer funded plan in place, then they're committed to doing the education, because they want people to know, like you said, like Jason was saying, being the hero for the employee population. If you have the key people own it, they're more likely to tell their colleagues about it as well. So we see our voluntary participation double or triple when there's just a small carve out in place as well.
Yep, 100%. And just because people will generally ask me to specifically classify, I would say mid starts at about 100 plus lives, and I would say large, you're getting into 1,000 plus for lives. Now, Mark, you tend to be quite a non-employer specialist. Do you want to handle this side of the house, this bullet point
Sure.
here?
Well, it's a very interesting marketplace. Every carrier has a different temperature for the risk because non-employer groups, meaning associations, PEOs, credit unions, we can get access to guaranteed issue products for the members. However, historically, that's been a very difficult to achieve in terms of, hitting minimum participation. So the carriers are very skeptical of that market. And what we look for is we look for groups that are willing to have the right marketing environment, enrollment conditions where we can envision success. We have, our own enrollment platform. So we actually have our own way to take applications, to do billing. But we also have, Gretchen and her team on the marketing side working with the association's marketing division to make this a standout tier one offer that's separate from their other benefits. We'll also usually bring in a team of specialists to make outbound calls to members that already own insurance products to talk about the new offering. And this is usually a special enrollment period, so a one-time offer to get the guaranteed issue, so it really gets people's attention. So we're not going to the uninsurable people and saying, hey, you've been declined before, you can have this now. We're going overall to the people that are members that are in the right demographics. I think we targeted with one of our groups like 40 to 65-year-old women and told them about this particular offer more broadly. And we had good success in terms of getting conversions during that enrollment. But with large associations, you're going to do it in segments. Usually they have components. You're going to have like advocates and access to certain components. So your eligible population might be a lot smaller, but you might have multiple enrollments, like 3 or 4 in a year, where you're targeting different segments and trying to get participation from each of those segments. But having the right strategy going into that is imperative. And I know a lot of people come to us with different association opportunities, and of course, we're always trying to help out. But usually, we're testing them to make sure that they're willing to invest in the time that's needed and the access we need before we even go to the carriers looking to get an offer. But now we have 3 group carriers that will work with us with non-employer groups. And so that's a good sign that we think the market's growing, and our success obviously gets them more comfortable that, we can continue to do these more in the future.
Mark, there's a question in the chat. Just we're curious too. Are any of those carriers that are in the group market, are there any that offer just traditional long-term care?
Currently, there are no guaranteed issue traditional long-term care products in the market. But like we talked about, maybe in the next 12 months or so, we might see some new entrants there as well, trying to, again, ride that wave because we see growth happening on the group side across the board.
Yeah, we had a real quick one about alumni groups. Mark, what are your thoughts on that before we move to the next slide?
The carriers are pretty broad in their definition of what eligible groups you can work with, but I would say the same factors apply. We have like this 6 questionnaire that you can download, and you can see if it's a good fit. They need to have a constitution and bylaws. They need to be formed for at least 2 years, and you need to have great access to the members for marketing. So if you can check the box on those 3 things, that's like kind of the must-have imperatives. And then from there, we look at what's the distribution by state. The carriers actually file each of these association products for the association by state. And because the carrier has to do additional filing and there's work required there, it has to be the right opportunity to get a proposal. But alumni groups can be great if they're especially a large university. That would be a great fit for this as well.
Just remember, members have to be actively at work to be eligible for the offer. So retiree groups and those associations would not be a fit in this case. But if you can check those boxes, and again, we can share the questionnaire and you can get through that pretty healthily, it's always worth taking a shot on. All right, why don't we move on to our next slide here?
Yep, I know we're a little bit more than halfway through, so we might have to kind of pick up a little bit just to get done by the top of the hour, but
no
why don't we-
problem. Yeah, I'll go through these really quick. How to identify opportunities in the group space. If you don't really know where to start, I would say try to figure out your key referral partners and who those might be. So if you work primarily on the individual side and you have business owner clients, that might be a good place to start. Or if you have clients who are, say, HR executives or executives at a small group, that's always a great place to start. Hey, is your employer doing any sort of planning with you on this in long-term care? That's a great way to start a conversation at the very least. I think for many long-term care specialists, a great pairing as a referral partner, and really for anybody looking to get into this market, is benefit brokers. They obviously have the group opportunities. I think many of them work with lots of groups and kind of have their implicit trust with a number of different product lines, but long-term care in many cases will not be their forte. And I think that's really the two places I would start. If you have individual clients who you believe might be connected to or be a decision maker at a group, that's a great place to start. And benefit brokers, if you can meet benefit brokers and really get their ear about group long-term care, that's really important. And the get the word out bullet is really here because many folks have even worked with group long-term care in the past. Many of you on this call may have worked with group long-term care in the past. And there was a period where it just kind of went away, went dormant a bit, especially guaranteed issue group long-term care. And now it's really coming back in a big way. And we're kind of still in the first inning of this 9-inning ball game with group long-term care. So I think it's important to get that word out and help people understand that guaranteed issue group long-term care exists again and is alive and well. So that can help
Jason?
you bring some people out of the woodwork.
Yeah, I'll mention one other thing. When you talk to employers or even benefit brokers, they will not realize that these hybrid plans are long-term care products.
Correct.
So I've heard there's nothing in the marketplace and they move on. I had that right before this webinar, actually, a call, an HR person told me that exact same thing. There's nothing comparable on the market to what I have. And they had a $5,000 a month 4-year policy. Well, we have a $5,000 a month long-term care 4-year policy on the group side. So I'm like, there is something comparable to what you have. Now, there's two caveats to that. One is that those products were underpriced, right? They're having rate increases on the traditional side. And so you have to help them understand that. But doing a policy review for them can go a long way. So just like when you do a policy review on the individual side, you'll see this trend a lot. Doing that for a group will help you build the relationship. And don't just assume that they know what you're talking about when you say you have these new long-term care products, because you have to help educate them about why these are long-term care first and life insurance second.
Yep. Okay, staying on the lightning round, I'm going to just try to mention some ideal groups. I'm not necessarily going to name all these industries or certain group sizes. What I'm going to talk about are groups that are in competitive industries looking to attract and retain talent. It can be very easy to lose an employee to somebody down the street, so offering a competitive benefits package that includes a unique benefit like long-term care is definitely a group to look out for that could be highly motivated to offer a plan. I would say groups that understand caregiving, either they have an executive or the business owner themselves has personally experienced in their family an extended care event. Somebody who understands long-term care, like we know on the individual side, generally makes a great client on the group side just as much, if not more so, because that is going to be your key advocate, your key communicator, and kind of your marketing assistant, being able to tell their long-term care story, but more importantly, being able to really articulate to their fellow employees why having a long-term care plan is so important.
By the way, the first buyer of the products is almost always the HR person we're talking to.
Yes, 100%.
So that tells you something about why they're bringing it in. It's definitely, there's a personal motivation for them to want to do this.
100%. And then I would just say groups across the board who culturally offer rich benefits or culturally like to fund benefits for their employees, I think, again, would be a really good fit for a long-term care plan. That generally shows, an HR team and a business owner that are a team and are very locked in and are both committed to being able to offer a wide array of benefits and even be able to provide some of that to their employees as compensation. So we have some new technology today to help you understand a little bit more about opportunities that you may have, particularly with a carrier fit. So I'm going to demo our Product Buddy tool here in a second. What that is a group product recommendation tool where you're able to enter just a few pieces of information, 4 inputs about your group, and get matched with a product recommendation. And what's more is not only will Product Buddy recommend a product for you, but it'll give you an amazing one-piece sell sheet that you can take to educate yourself about the product, or even just to kind of use as a leave behind. So Mark, I am going to take over sharing from you so that I can give this a little debut.
Also
So if you
mention, we just launched this today, so we're going to be iterating this quite a bit. If you see anything that looks odd, don't be alarmed. Just let us know about it, because we'll make updates and we'll kind of add some clarity too about why we chose certain products to recommend. But hopefully this gives you some good guidance for that first presentation before we go to the RFP process and go to multiple carriers.
100%, and a massive shout out to our team for putting this together. But I'm just going to do a quick example case. I'm going to go to, I don't know, let's just say my group is in the state of Illinois. It is an employer group, and you have the option to choose between employer and non-employer here. How many actively at work employees? Let's just say we have 5 to 49 employees, and you can see whether I put employer funding, yes or no. We get a recommendation of Transamerica here. And what you're going to get, let me actually download this so I can allow you to see it a little more closely here. You will get a one-page sell sheet with the carrier recommendation, financial rating, and you'll get an idea of the overall value of the insurance for an example age 45 employee. You'll have sample pricing here. You'll have benefit levels that we're typically seeing for a guaranteed issue offer, and you're getting lots of other important information such as product guarantees, product features, eligibility. What does it take for an employee to be eligible? Long-term care benefits, minimum sample premium rates for minimum guaranteed issue. So if you were to say do a employer funded base plan, you can get an idea of what pricing would be like on a monthly basis for a 35, 45, and 55-year-old employee. And you can get an idea of what maximum GI premium rates would be. So how much would it cost for a 35, 45, 55-year-old on a monthly basis to purchase a plan at the maximum guaranteed issue amount? So this is just about all you need to get a really, really good understanding of what this product offers, not just from a benefit standpoint, not just from a standpoint of guarantees, but also get the pricing and the value prop of this product right at your fingertips, just because, excuse me, I'll reshare the Product Buddy, just because you entered in 4 inputs, and it's going to be sensitive to your situation. So let's say I'm in Illinois, but I have a 100+ life group. Now we're recommending Chubb. And you can see all of the different information on Chubb, and you can see you're actually getting a different one-pager that is customized to your opportunity. So we're really excited about this. We get a lot of questions with people who are thinking about approaching a group about long-term care and just kind of want to have what they need to have as far as bullet points for their conversation. Now we've got a tool that can give it to you in 15 seconds or less, and you can download it to a PDF and have it right there at your fingertips. So
Yeah,
this
Jason.
is an important step in this process for us now in identifying your opportunity.
Yeah, let me kind of give a word on the carriers, because I don't want to kind of offend anybody in terms of what your preferred carrier is. So right now, we would say there are 4 carriers that really focus on the long-term care components and let us do standalone group long-term care with life insurance offers, have extension riders, which again is that main feature we look for. And there's probably in total maybe 10 carriers that have either chronic care or long-term care on their group life policies to begin with. So we're tending to recommend those 4 carriers just because they allow you to do those kind of long-term care focused types of sales. In terms of which carriers are best, it really is going to be up to, right? We all know that everyone's got their favorites. What we're seeing in the small group market right now is Allstate Benefits and Transamerica have the best opportunities for groups that are between 5 and 100. Okay, so if you're doing small group, if you're doing employer funding, we're seeing more and more cases going in that direction. If you're interested in large groups, voluntary or even with employer funding carve-outs, we're seeing a lot of brokers and GAs using Chubb and Trustmark. Okay, so those are the two most popular because, again, they have the extension riders. They tend to be very competitively priced, and you can do a standalone long-term care offer. That doesn't mean that you shouldn't do an Allstate or a Transamerica for a group that's larger. Of course, they're doing those groups as well, just to kind of give you an idea of some of the niches that we see out there. So when we recommend something, and in the future, we'll have a list of all the carriers that are available. This is just kind of like a teaser, if you will, to get you guys to give us some feedback as to whether you like the tool, and then we'll be iterating this as we go. But just so you know, it's not going to be like this is the only one that we recommend. It's just one good option for you to lead with. And like I said, you can go to the RFP process and actually get proposals for each one because each underwriting offer might be different. Buddy has preferred underwriting offers from all the main carriers. So again, for those of you that are working with us, those of you that are getting contracts through us, you'll have access to those underwriting offers. And this also reflects some of our preferred underwriting. So just keep in mind that, it's not like this is a science. Just think of this as, okay, a starting point for you to begin your search.
Step one on this product recommendation journey.
Yep. I'm going to go and I'll reshare the presentation here.
And we got to pick our feet up and put them down because we got to get to Gretchen and Sandy and all the wonderful stuff they have to share with us. But I just want to do one really quick note on our group form. So at buddyins.com/group, our brand new group page, you can fill out a form to get help with your group opportunity. Obviously, Product Buddy is there to kind of help you get started, get your feet wet. But if you have a group that you know is interested in long-term care planning, you know their motivation for long-term care planning, you've got that relationship with another involved broker, and ideally you have a copy of their updated census, which is going to help us analyze truly what we think the best option is going to be and look into different employer-funded strategies. You can head to buddyins.com/group, fill out the form, and at this point, email a census over to Mark and I if you have an opportunity that you'd like us to look at. But going through that group form, which I will pull up in just one moment here.
You want me to let you share it, or do you want me to do it?
I can do it.
You can also use the group page.
That is true. So buddyins.com/group. Get help with a group opportunity.
We're not looking at your screen.
Oh, let me see.
That was
Sorry
a great
about that.
screen though, Jason.
All right. Let's go back to buddyins.com/group. Get help with a group opportunity. Big honking orange button. Can't miss it. And here is the form to be filled out. So you can fill that out, submit it. We even have a copy of a census template if you don't have one on hand that you can bring to the employer if you need it. And we will be able to take off running with you and help you with that group opportunity.
Yeah. And just so everyone knows, we still have the same philosophy at Buddy INS where we partner with your BGAs. So again, a lot of BGAs actually do their contracts with us on the group side of the business. We're happy to set you up so you don't have to change any of your relationships. And we do have a full service model and a self-service model. So if you want to go ahead and run the enrollment yourself because you have experience or you're a benefit broker, you can leverage our enrollment technology, marketing technology, and our underwriting offers to kind of be at the best of both worlds. If you've never done group before, we highly suggest you use the full service offering because, again, it's a whole different game when it comes to enrolling a large number of people, working with HR, working with the carriers. So take advantage of our knowledge there and our experience working with those situations, and you can always decide case by case how you want to run the groups. So let me advance here a little bit. I know we got a few more sections and there's some Q&A we want to get to before we leave. So in terms of sales strategies, again, we talked through these, so I'm going to just kind of gloss over them, but leading with long-term care and how it impacts caregivers is still the #1 conversation that I have. HR understands that, right? People are coming in late to the office, they're leaving early. A lot of times it's because they got a lot on their plate. taking care of their kids, taking care of their parents, having a full-time job. Something's got to give. When you talk about those issues, people start sharing their stories with you. That's when you're really, engaging in that relationship that's going to lead you to the why this planning is important. And then again, each of these different conversation points we touched upon is it's all about the fact that this is new, this is exciting, this is guaranteed, right? A lot of the things that they may not expect from long-term care, you're going to deliver. So can't tell you how many times we've kind of worked in our study group and somebody's gone away and they presented this and they've gotten yes answers from the people they're talking to. This does work, this approach that we're talking about. So give it a shot. Don't be afraid. I think that's the one thing is like people are afraid of what they don't know. But really, you can say yes to most things and you're going to be correct in your answers in terms of being able to deliver on those expectations. So you sold a group, now what? Let me turn it over to Gretchen. What does the marketing process looks like?
And Gretchen's going to talk really fast. So Sandy has an opportunity to get in here too. Yeah, I wanted to just share real quickly the marketing process, because we all know that long-term care is just innately a more complicated sale. The messaging, the marketing can also be more complicated. So our whole purpose here is to uncomplicate it for you and to uncomplicate it for the organizations that we're working with. So we're going to have a self-service option, which we haven't talked about really yet. But I'm going to focus, and we don't have that whole process fleshed out yet. It'll be mostly for the smaller groups, but I'm going to focus on the where you're partnering, you're fully in partnership with us on an enrollment process, and what that looks like on the marketing side. And then Sandy will talk about the enrollment side. So I'm going to stop your screen here real quick, Mark. Okay. Yeah. Okay. So what I want to talk about mostly is you really want to get through what we call, some of you have heard me say this before, a journey of discovery. So because most of these people, especially in the younger groups, and we've been dealing with some younger groups, so believe me, we know what we're talking about here. You have to start with an education process. So we will guide you through the entire thing. So from the very first marketing kickoff call, where we are in discussion with the organization that you have brought in, we're going to gather together, all of us, and we're going to come to an agreement on what the scope of this education and enrollment process looks like. So we will help with that if this is a full enrollment. We're going to walk through that with you. There will be a marketing plan that's laid out that I create. There will also could be a project checklist. So there's a lot that goes into managing the education and the communication process, whether it's an employer or an association. That being said, on the employer side, it generally does tend to be a little bit easier. I want to say easier, a little easier, because the employer already has that ongoing communication relationship with the employees. On the association side, I think Mark alluded to this earlier, there's a much bigger challenge, because it's very often the association doesn't have that regular communication with the association members. If they do, we just completed 2 enrollments for 2 associations that were very similar. One had their own marketing team, and they do a great job of ongoing communication, and then one did not have a strong communication process. So the one that did was a much better and more successful process. The one that didn't, we brought in, and I think he's on this call right now, we brought in a specialist to start making outbound calls. It was like the last week of the enrollment, and that ended up turning it around. So you have to really keep in mind what kind of current communication process an organization has with their employees or their members. And then we try to tap into whatever it is that they normally do. So it could be an email campaign, could be newsletters, an intranet. We do webinars. So all of that will be planned out both on the education side. So before the enrollment even starts, we try to start some education. And then once the enrollment starts, inviting them to webinars, to look at the landing pages, to really take the time to educate themselves. And we're sort of guiding that whole process. So I have a whole sheet full of notes that I wanted to talk to them about. The marketing plan. The other thing that I wanted to make sure I mention is it can be important, and I think Mark talked about this, to find your advocate. Sometimes it is the person who brought long-term care to the company, whoever is in that organization that made that decision. Oftentimes they're your advocate, but whenever you have a strong advocate, that's when you have the best outcomes, really. So yeah, I would just encourage you to, if you're going to work directly with us, understand, take from this that we will be with you through that process, and we will map out what that education and enrollment journey is going to look like.
Okay,
So.
well, real quick, because I know Sandy has to jump here.
Yeah.
You want to do a quick minute or two on the enrollment process itself?
Jason said that he would go ahead and run through it after Gretchen actually does the demo page, because it all flows directly from that. So.
Okay, so let me do that. Let me share that real quick.
Okay. And I know we're going a little bit long here, so thanks folks for sticking around here. If you have to jump, the session's being recorded and you can catch the end later. But we'll go like another 5 or 10 minutes and hopefully take a question if there's something in the chat.
All right. So this would be the long-term care benefit landing page. So here's where they can go anytime to get educated on. Basically, it starts with LTC 101. What is long-term care? Why do I need it? But the most important page, the one that they probably go to the most, is where we have our calculators. And so this is where they can really play around with, their age, what they think their claim age is going to be, smoker, non-smoker, and then get into, the different face amounts. So it's a great tool because it empowers them to really start working on the numbers and building their own benefit and seeing what the impact would be. I think most of you have probably seen this already. And then we go into additional information specifically about, it's still super high level, but specifically about the product. And then there's also a page that will include the webinar replay. We don't have one here right now, but and then of course FAQs. And then once they're educated, then they would go here once they're ready to enroll. Do you want me to click on that?
Yeah, why don't you?
All right. I'm not exactly sure where it goes. Oh, there it is. Yeah.
So this is going to be a demo of our enrollment platform. So I think this works really, really well as a journey from education straight to I'm ready to apply. Of course, there may be many different steps in between that, but for the employee to take action on all this self-service is just excellent. And I'm hoping we can just do a really, really quick demo of how simple and streamlined the enrollment process is in our platform. Again, integrated with many of the carriers that we work with. offering, generally a quick explainer video about the product, then boom, let's get ready to get started. And we try to take things page by page, one question at a time, hopefully very easy to
Are we gonna go
answer.
through the whole thing? Because I gotta start making stuff up.
We won't take it all the way through, but yeah, you can be whoever you like. Again, your email can be whoever you like.
Yeah, the other thing
Just
about
as
the enrollment experience is that there's a very, very high tech component to it. So if the employer gives us a census, it will actually pre-fill all the information and it won't ask the questions of the employee. So a lot of these will go by very quick because most of the information has already been provided to us. There's no medical questions, and they're just selecting the amount of coverage they want, their price, and then checking out, basically at the end of that process.
But this was designed, with an experience in mind where people aren't going to have to go and fumble around and look for information. It's going to be simple, one screen at a time, even being able to select their coverage amount and see pricing directly from this screen here, play around with the little slider, and just take themselves through the enrollment process one step at a time. And I think we're seeing, Mark, the experience gets people from in a guaranteed issue scenario from start to finish in about 10 to 15 minutes self-service with an individual certificate after they've been approved, right
Yeah, if it's
after filling
employer
out the app.
funded, actually we do a census enrollment and there is no
Yep.
application for the employee to fill out. So sometimes
Right.
it's hard to chase down people for even the amounts that are paid for already by the employer. So you don't have to worry about that. This is just for that voluntary buy-up option or spouses or situations where it's a voluntary instead of employer funded.
But yeah, this is just designed to show you a little bit of a taste of what somebody would go through in this platform. And I think, Gretchen, you've done a fantastic job frantically demoing all the questions. We can sort of take it from here. And if you do have a group that goes live with us, you'll be able to see this up close and personal and how it would pertain to your group and the product they would enroll with. Thank you for that.
You're welcome anytime.
I know we're in the interest of time here. Do you want to answer any questions, Joe, I know there were a few being typed in there while we're here live.
Yeah, there's a few. Here, let me jump back. One of them was, how are employees taxed if employer paid? Are employee pensions tax deductible? Is that one that we're able
I don't know
to?
about the pension question, but the way that these products work is they're usually using post-tax dollars to pay the premium, which means that they're tax-free benefits on both the long-term care and the life insurance benefits. There's some niches there where there are certain products that may be tax deductible, which would generally mean on the hybrid side that a portion of that premium would be imputed income. But there is some favorable tax treatment there as well, and then tax-free benefits. But I would say that's most commonly not used, and most of the time it's post-tax premiums.
Another one also related to taxes as well as, what about taxation of premiums and benefits assuming employer paid?
That's what I was referring to. Yeah, so that
Okay.
answered that question. Yeah.
Too soon. Another one that we had was, our group LTC benefits only offered during annual open enrollment period, or can they also be offered to employees during a special enrollment period?
Yeah, our preferred way is to do it outside of open enrollment for the first enrollment because we need that education, and HR is really busy and it's hard to make sure that people can see that offer. And then subsequent to that, we'll usually put it into the annual enrollment as like a re-education process. But there's a lot of different flexibility you have there in working with the carriers. Sometimes you can even get multiple special enrollment periods. It depends on the situation with the group though.
And then one, I think that was just going back to the demo that Gretchen was just showing was, are you able to go through this enrollment process with the benefit brokers we are working with so they can better understand the process prior to enrolling a group brought to us by their relationships?
Yeah, that's just how we operate. That's why we're called BuddyIns, is we will jump on to any call that you have with brokers, with clients. We have a lot of experience with it. You should never be afraid to bring up this topic because you don't feel like you're an expert in it. Just get one of us on the line with you, either me, Jason, or Wendy, and we will actually help you have that initial conversation. And once you see it once or twice, you'll get very comfortable quickly.
And once you get comfortable, it's fun. It's a fun conversation because you get to learn about all different types of employers and all different types of employer cultures out there. And we're in this business because we like meeting new people. So yeah,
And
never
HR
be
people are
afraid.
generally pretty nice. It's
They
kinda fun.
are. They are really nice. So yeah, never be afraid to ask for a companion. We're happy to help.
And that wraps it up for questions that we had.
Gretchen, you want to do a preview of our next webinar?
Yes, I do. This is our annual, this will be the 4th year we've done it, I think. Our BuddyIns annual year in review will be January 21st. Cannot believe it's almost 2025. So you have that to look forward to. So watch for the registration. Will be on our website, but we'll also be putting it in the newsletter and on social media. So just watch for that and register. Looking forward to that. It's always a hot one for sure.
If you can't get enough of sessions like this and you're not aware of it, we actually meet twice a week for study groups just like this on Tuesdays at this time, 1 o'clock Pacific time, 4 o'clock Eastern time, and on Thursdays at exactly this time. So don't be a stranger. Feel free to go to
And
our join community page and you can sign up for our weekly groups too.
yep. And yes, you'll be getting Kai, I'm sorry. You'll be getting a replay for anyone who registered for this webinar, and there will also be a summary
Yep.
of this one today. Yeah.
Yeah, and I think we could have done double the length with all we have to say about group long-term care. So especially for the Thursday study groups, if you are interested in continuing to get a foothold in this market, we will actually take each of those sections as their own study group sessions quite a bit. So stick around. We send agendas and recordings for each of the study groups, so you'll know what we're doing ahead of time. And if you can't make it, you'll get a summary of that in your email afterward. And we know everybody's busy, so feel free to pick and choose what you like to attend and what you want to see. And as always, we appreciate all the support.
And real quick, I just wanted to thank Joe. Joe Filipenko has been monitoring the chat, and he's also the one who does the prezzies. So what you're looking at here, Joe creates. He's part of my team. So thank you, Joe.
Thank you. I appreciate it.
Joe does like a billion things. So there are plenty of things you saw today that you will likely want to thank Joe for, as we all do.
Thank you. I love it.
Mark, you want to wrap us up
Yep.
and send us home?
With that, we'll let you all go. Appreciate everyone taking the time. And like I said, don't be a stranger. This group market is fast growing. And it doesn't mean that we're not active in the individual space, but this is how we're actually winning over the hearts and the minds and acquiring clients so that we can offer individual products to them as well. So let us know where you have opportunities and we're happy to help you out.
Thanks, everyone. Be well.
Bye, everyone.
Bye.